Hey everyone, welcome back to Corporate Decoder, the place where we make digging through financial reports as fun as finding a hidden $20 bill in your old jeans. In this video, we are going to crack open the semi-annual shareholder report for the Royce Quant Small Cap Quality Value ETF and see what kind of financial goodies or maybe lumps of coal are hiding inside. Before we dive deep, if you enjoy getting the real story behind corporate filings without all the jargon, make sure you are subscribed. And hey, we have a great community on Discord linked in the description below if you want to chat about these markets with fellow enthusiasts. Alright, so what we have here is a report from September 2025 for the Royce Quant Small Cap Quality Value ETF. Think of this ETF as a basket of stocks chosen by smart people who believe in picking companies that are both good quality and have good value. This report covers the 6 months from April to September of 2025. Scroll what were the fund costs for the last 6 months based on a hypothetical $10,000 investment scroll. Let's talk about costs because nobody likes surprises there. For a $10,000 investment in this ETF over these 6 months, the cost was just $32. That is about 0.60%. Now that might sound small, but remember these costs add up over time and can eat into your investment returns. It seems like for this period, the costs were pretty reasonable. Scroll key fund statistics as of the 30th of September 2025. Scroll, now let's look at some key numbers as of the 30th of September 2025. The total net assets, the total value of everything this fund owns, was about $27.7 million. That tells us the size of the fund. They held about 289 different investments, which shows a decent level of diversification, not too concentrated. The portfolio turnover rate was 27%. This means they bought and sold about 27% of their holdings in that year. A lower turnover rate often suggests a more buy and hold strategy, which can sometimes lead to lower trading costs and potentially better tax efficiency. When we look at what the fund actually owns, we see that almost all of it, 99.8%, is in common stocks. This means they are mostly investing in shares of various companies. Scroll total net assets $277734. 3431 funny scroll. The total net assets were a little over $27.7 million. This number fluctuates as the market moves and as people buy or sell shares of the ETF. As we saw, nearly all of their investments are in common stocks, that is, company shares. The financial statements are where we get the real nitty-gritty information. This section includes the schedule of investments, the statement of assets and liabilities, the statement of operations, and more. Scroll schedule of investments. Scroll, this is the heart of the report for many investors. It lists out every single stock and other security the fund owns as of the 30th of September 2025. We can see the names of the companies, the number of shares held, and their value. Scroll communication services, 5.8%, StoryPoint. Scroll looking at sectors, the fund had about 5.8% invested in communication services companies. This could include things like phone companies or media companies. Scroll consumer discretionary, 13.6% scroll. They had a significant 13.6% in consumer discretionary. These are companies that sell things people want but don't necessarily need, like cars or restaurant meals. This sector can be sensitive to economic slowdowns. Scroll consumer staples, 3.1%. Scroll about 3.1% was in consumer staples. These are companies that sell everyday necessities like food and drinks. These tend to be more stable even in tough economic times. Scroll energy, 6.6%. Scroll the fund had 6.6% in the energy sector, which can be quite volatile depending on oil and gas prices. Scroll financials, 21.2%. Scroll, a big chunk over 21%, was in financials. This includes banks, investment firms, and insurance companies. It's a sector that often moves with the broader economy and interest rate changes. Scroll healthcare, 18.8%. Scroll healthcare was another significant holding at nearly 19%. This sector often does well regardless of the economic cycle, as people generally need healthcare services. Scroll industrials, 14.6%. Twin Scroll. The fund also held about 14.6% in industrials, which covers a broad range of companies from aerospace to manufacturing. Scroll information technology, 10.6%. Twin Scroll technology companies made up about 10.6% of the portfolio. Scroll materials, 3.9%. Scroll. And finally, 3.9% was in materials like chemicals and mining companies. Scroll investments at value cost $27,001,595. Scroll, this statement of assets and liabilities shows us the fund's financial health on a specific date. As of the 30th of September 2025, the investments were valued at over $27.7 million, but they originally cost around $27 million. This difference of about $773,000 represents the unrealized gains on their investments. Scroll total liabilities. Scroll the total liabilities were very small at just over $13,000. This is excellent, meaning the fund has very few debts or outstanding payments. Scroll total net assets $27,777,3431. Scroll, this brings us to the total net assets, which as we discussed earlier was about $27.7 million. Scroll net investment income. Scroll, now looking at the statement of operations for the 6 months ending the 30th of September 2025, we see their investment income. They earned about $229,000 from dividends and interest. Scroll total expenses. Scroll, their total expenses for that period were about $75,000. Scroll net investment income. Scroll, this left them with a net investment income of over $154,000. So they earned more than they spent on operations, which is a good sign. Scroll net realized gain from investment transactions. Scroll, on top of that, they had net realized gains from selling investments totaling over $436,000. This means when they sold some of their stock holdings, they made a profit. Scroll change in net unrealized appreciation. Depreciation from investments to Scroll. And here is where things get really interesting. The change in net unrealized appreciation from investments was a positive $2.58 million. This means the value of stocks they still hold but haven't sold increased by that much. Scroll increase in net assets from operations. Scroll, all of this combined led to an increase in net assets from operations of over $3.1 million for just 6 months. That is a very strong performance. Scroll operations. $154,091. Scroll, looking at the statements of changes in net assets, we can compare performance over time. For the 6 months ending the 30th of September 2025, their net investment income was $154,000, and they had net realized gains of $436,000. Scroll change in net unrealized appreciation, depreciation $2929855. Scroll, but take a look at the year ended the 31st of March 2025. Here their net unrealized appreciation was a negative $2.9 million. So the market had been down for them in that prior year, causing the value of their holdings to drop. This highlights the volatility of the stock market and how ETFs can experience significant swings. Scroll net investment income $0.24. Scroll. Now in the financial highlights we get A per S hair view. For the 6 months ended the 30th of September 2025, the net investment income per share was 24 cents. Scroll net realized and unrealized gain losses $4.96. Scroll, and the net realized and unrealized gain per share was a very healthy $4.96. This clearly shows the strong recovery and growth they experienced in this reporting period compared to the prior year. Scroll total return. Based on NAV 13.79%, Scroll, the total return based on net asset value for this period was nearly 14%. That is a fantastic return for just 6 months, and especially impressive coming after a down year. It shows their strategy is working well when the market cooperates. Scroll 1. Organization and significant accounting policies. Scroll, under the hood, the fund operates under a lot of standard accounting frameworks. They explain how investments are valued and that they use market prices when available. If not, they have procedures to determine fair value. Scroll equity securities for which market quotations are available are valued at the last reported sales price or official closing price on the primary market or exchange on which they trade. Scroll, when they can't get a clear market price, they use what are called level 3 inputs. Essentially, this means they use their own assumptions and models to figure out the value. For this report, they state that level 1 and level 2 inputs make up almost all their investments, which is good, showing most of their holdings have clear market prices. Scroll investment management agreement. Scroll, the report details the agreements with their investment manager, Franklin Templeton Fund Advisor LLC, and sub-advisor Royce and Associates LP. They explain how the fees are structured. It's a unified fee arrangement, meaning one fee covers pretty much everything. Scroll premium for the 6 months ended the 30th of September. $2025 $690.6256 of Scroll. Looking at the investment purchases and sales, we see that for the 6 months ending the 30th of September 2025, they bought about $6.9 million worth of securities and sold about $6.9 million worth of securities. This aligns with the portfolio turnover rate we saw earlier. Scroll restricted securities to Scroll. They also disclosed any restricted securities, which are those that can't be easily bought or sold on the open market. In this case, they had 2 small holdings related to earnout from OmniAb Incorporated. Interestingly, these were valued at $0 and represented a negligible percentage of net assets. This suggests these were likely contingent payments or options that had expired or were not exercisable at the time of the report. Scroll deferred capital losses. Scroll, the fund, had deferred capital losses of over $5.3 million as of March 2025. These losses can be used in the future to offset taxable capital gains, which can be beneficial for tax purposes. So what is the story here with the Royce Quant Small Cap Quality Value ETF? Well, on the surface, it looks like a strong recovery and a very profitable period. After a tough year in 2025 where their unrealized gains turned into losses, the fund really bounced back in the first half of 2025. The investment managers seem to have navigated the market well, picking stocks that performed strongly. The costs are low and their asset base is growing, which is always a good sign. The fact that almost all their holdings are in common stocks means they are fully exposed to market movements, which is how you get those great returns when the market is up, but also exposes them to significant drops like they saw in the prior year. Their strategy of focusing on quality and value seems to have paid off, but it could also mean they underperform when different market styles are in favor. The management and sub-advisory team's contracts were renewed, indicating the board is happy with their performance and services. The fund returned almost 14% in just 6 months, which is a fantastic result. Overall, this report paints a picture of a fund that had a very successful reporting period after a challenging prior year. The key is to watch if they can maintain this momentum in different market conditions. Alright, that is our deep dive into the Royce Quant Small Cap Quality Value ETF's latest shareholder report. What do you think about their performance and their investment strategy? Let me know your thoughts in the comments below. If you found this analysis helpful, please give this video a thumbs up as it really helps the channel. And if you want to catch more of these corporate decoder sessions, make sure you are subscribed and ring that notification bell. Don't forget to join our Discord community linked in the description to keep the conversation going. Thanks for watching, and I will see you in the next video.